Gold prices today and in the future. Hello everyone's. Today, I'd like to talk about gold, specifically what's happening with gold prices right now, and what we can expect in the near future. Gold has long been regarded not merely as a precious metal, but as a strategic financial asset that functions as a hedge against systemic risk. In the current global context, gold prices have reached historically elevated levels and, more importantly, have demonstrated remarkable resilience despite fluctuations in traditional macroeconomic indicators. To understand this phenomenon, it is essential to examine several interrelated drivers. First and foremost, geopolitical instability continues to play a pivotal role. Ongoing conflicts, rising geopolitical tensions, and an increasingly fragmented global order have intensified risk aversion among investors. Consequently, gold has reasserted its role as a safe haven asset, attracting substantial capital inflows during periods of uncertainty. Secondly, persistent inflationary pressures have significantly contributed to the upward momentum of gold prices. Although inflation rates have moderated in some regions, concerns about long-term currency debasement remain prevalent. In such an environment, gold serves as a reliable store of value, preserving purchasing power over time. Another critical factor lies in monetary policy expectations. While interest rates have remained relatively high in recent periods, market participants increasingly anticipate a shift toward monetary easing. As real interest rates decline, the opportunity cost of holding non-yielding assets such as gold diminishes, thereby enhancing its attractiveness. Equally important is the structural demand driven by central banks. In recent years, many central banks, particularly in emerging economies, have substantially increased their gold reserves as part of a broader strategy to diversify away from reliance on major reserve currencies. This sustained institutional demand has provided a strong foundation for long-term price support. Interestingly, the current gold market appears to be diverging from traditional correlations. Historically, gold prices tended to move inversely with the US dollar and bond yields. However, in the present environment, gold has shown strength even when these factors would typically exert downward pressure. This suggests a potential paradigm shift in the way gold is perceived within the global financial system. Looking ahead, the outlook for gold remains broadly positive, albeit with expected short-term volatility. In the near term, price fluctuations are likely as markets react to evolving economic data and policy signals. Nevertheless, over the medium to long term, structural factors, such as geopolitical uncertainty, central bank demand, and concerns over global debt sustainability, are expected to continue supporting higher price levels. In conclusion, gold is no longer simply a defensive asset, it is increasingly becoming a cornerstone of strategic asset allocation. Its current price reflects not only immediate market conditions but also deeper transformations within the global economic landscape. For investors, understanding these underlying dynamics is crucial in making informed and forward-looking financial decisions. Thank you for your attention.